Hello again, traders, and welcome back to the Hot Stocks Outlook for April 4th, 2025. I hope you all have had an excellent week out there in the financial markets. And as always, we're here to take a look at the most recent VantagePoint AI predictive forecast. So if you haven't already, make sure you go ahead and click on the link down in the description below. And you can get signed up for a live demonstration so you can learn all the specifics about how these predictive technologies are helping traders make much better trading decisions when out in the marketplace. Now, as we typically do, we start out by taking a look at the S&P 500 via our SPY ETF. And boy, we see that, hey, we have some more volatility kicking into the markets. That takes us down 8% year to date. Last 5 trading days, down 5%. And going into this Friday, we're seeing more volatility still here. And so this is why it's especially important to have the right tools and really make sure that you're aware of a lot of these changing market conditions and, hey, how bullish or bearish are things out there? So I thought it might be a good opportunity to just take a look at the SPY or the S&P 500 itself here, and we'll go through the most recent forecasts in the same way that we do on all our previous forecasts and previous weeks and hot stocks outlooks here. So what we're looking at here is daily price action, right? So each candle that you're seeing on the chart, well, that's going to represent a full and complete trading day. And the first thing that should jump out at you is right up against that price data that there's a black line and also a blue line value. So the black line that you're seeing there is actually a simple moving average, or what we refer to as the actual simple moving average. And in this case, it's just a 10 period. So it'll look back at the previous 10 closes, add those all together, and then divide by 10. And a lot of the weakness with traditional technical analysis like this is that all of the data just comes from the past. So it's always really lagging and just summarizing what's already occurred in the market and has no predictive capability. And additionally, it only looks at one market in isolation. So unlike the VantagePoint software here, it has no ability to understand how other markets are driving and influencing those future prices. And so when we look at this chart for the SPY, what we can see here is that we're able to compare that black or lagging moving average to this proprietary predicted moving average. And for this to get calculated, which we can think of that as a prediction of future prices that's going to get plotted on the chart for us every evening, well, this is where the technology of artificial neural networks come into play, and they're performing what we would call intermarket analysis. And so what that means is that rather than just looking at past prices and summarizing what's already happened, we're able to look at other markets that are known to drive and influence the future price of that target market that you're trading. So in this case, the SPY. Now, in a big market like this, we can understand that, hey, that's going to be things like the broader futures market, might be those indices like the Russell, NASDAQ, S&P 500, but it's able to look at futures and commodity markets, things like the value of the dollar index or global interest rates, or even things like gold, silver, and platinum and copper markets, whatever it happens to be, wheat, corn. And it's even going to go down the line and find very important relationships within individual stocks. So that can be things like Microsoft shares important relationships with the market, some of those large cap, Magnificent Seven stocks. When we see movements in there, it will give us some information as to how likely there's to be a move in other markets, in this case, SPY. So what we have here is you see that blue line or that prediction of future prices crossing below that black line or the actual moving average and letting us know that the overall trend is lower. So traders would want to look to, in this case, on the SPY specifically, short, take profits on shorts, and that would really be the mode you're in. Over the past now 5 trading days, we see the market down. It's going to be down more than this 5% here going through the weekend here. And so that's a very helpful tool to really help traders identify, well, what's the bigger picture here? Are we seeing markets move higher? Are we starting to see the broader market move lower? And so we're seeing, again, in the SPY here, very clearly going into this week, things are bearish. Now, if you look at the very bottom of the chart, and also when we get to these subsequent examples, you see this bar at the bottom of the chart, and it could go from green to red, in this case, back to red here. And this is actually another predictive indicator that utilizes that technological approach, but this is tuned to solve a different problem for traders, and it's really just looking at short-term strength or weakness in the market. So we can think of this as actually a 48-hour forecast of strength or weakness over the next couple of trading days. And so you see that as strength starts to come into the market, that neural index gets bullish. We actually do get a move higher here over the next trading day, but that blue line in that prediction, you see the overall trend still bearish and things getting driven down by a lot of news, right? And a catalyst that, you know, the software doesn't understand that there's going to be tariffs and all of this, but it's picking up on those global market relationships and the behavior of other market participants and skewing in the appropriate direction in this case. And so really nice move here as the SPY goes lower. But let's go take a look at some of these other examples. And actually, before I do that, we have also our predicted highs and lows, right? So we've got that overall trend direction, that short-term forecasting from the neural index, and then you're even given that intraday level. So as we look at these VantagePoint predicted highs and lows on the SPY, well, what do we see here? That since that forecast has been lower, we've gone and ticked up at that predicted high there. We started to grind a little bit lower as you see the predicted trading high telling you we're going to move a little bit higher, going through the midpoint of the week here, a little bit higher still. And then once we get to that predicted high, that's where we see the resumption of the downtrend. So really interesting stuff. And, this is through Fed announcements, earnings reports, and also tariff announcements, it would seem here. But let's go back to some previous examples. And again, just to highlight how things update, right? So Northrop Grumman, this is one of the few examples on the bullish side where it's like, okay, well, things still look pretty bullish here. The forecasts are quite bullish, and we can keep it simple, right? So if we're trading the SPY, well, clearly that market is in a downtrend. Northrop Grumman, though, we're in an uptrend. So it might be an area where you're long in addition to, some hedging and some bearish opportunities as well. But again, as long as that blue line remains above the black line, neural index is bullish. You see going into this week, we're starting to get some bearishness from the neural index and prices run sideways here. But again, we can just look at those VantagePoint predicted highs and lows. And we've brought this through for the past 3 weeks now. Just keep updating the forecast here, but you see how these levels work. So early on, I think this was a Friday here, we get that nice move higher. And again, just every single day moving down towards these predicted lows and offering some short day trading opportunities, take a little piece out of the market, at least in one of these areas where we've seen more strength. And you see, even with that move yesterday, Northrop Grumman actually trading higher here throughout the day. Here's shares of Nike, and this has been a big story as well, driven lower by tariffs, but this is something that we brought this through probably about 2 or 3 times over the past month here because we have such a bearish forecast. So you see very clearly that predicted moving average crossing below the actual moving average, a ton of separation here between those values, signifying that the longer term trend is still in place to the downside. And we can again see those predicted neural index signals where you get these little blips on the chart where you get some consolidation and sideways price action, but that is just some short-term strength within the downtrend. And you see, just like in these previous examples, once that strength sort of diminishes, well, we're back to the overall trend and prices going lower. Again, we can look at these VantagePoint predicted highs and lows, see how accurate are all of these levels when we get to these really short-term time frames. And that's just about perfect there. That would have been Tuesday, trading higher, really being subdued quite here, on Wednesday here, and then really succumbing to the broader market move here. And clearly here, Nike never moving into an uptrend, really clearly remaining in that downward trajectory and offering many opportunities over the previous weeks to get short and add some of that bearish exposure into the portfolio. Now, this is really important here when we start to see some weakness come in. Well, here we got the banking stocks. Here's Bank of America, pretty much as clear as it gets here, right? Blue line crossing below the black line, neural index bearish, and just more and more separation as we move into this decline that we're seeing here. And this is, actually really great, right? As we get lower prices, it just opens up newer opportunities at lower prices. Volatility really mixes things up and adds a lot of variation to the market. And that creates numerous future opportunities, potentially on the bullish side when we start to see strength come in and these forecasts resume to the upside. But here you see clearly some levels up above 41.50. You do not want to be long, and now we are down below about 37 there. So very large moves here, in the equity space, and something that you want to be prepared for. And this is something that, there's just not been the ability to get the portfolio bullish here. You got so many of these forecasts are skewing to the bearish side. So it's short, buy some, put options. If you do go long, it's very short term, trailing stops and day trading and things like that. But not the time to be taking some, higher risk bets on the bullish side here. And we're seeing a lot of shares decline off about 11% there just in the past 5 trading days on a very large banking stock. And so this, wipes up the whole sector, right? We're seeing broadly financials starting to move lower. It's not just Bank in America, right? And what's valuable about this is that the price clues that you're getting from Bank of America are assisting you if you're trading things like XLF or, the ETFs or some other banking stocks. That's where these things and tools really leverage against each other. Here's Micron Technology, so a tech name here. And we see as clear as it gets, right? Blue line moving below the black line, A lot of weakness from the Neural Index. We'll get those short-lived movements where the Neural Index will get bullish, and that's where we saw a little bit of strength come into the market. But look at the separation here between that prediction and the actual moving average, and then we just continue on lower here. So numerous opportunities up towards those predicted highs to, if anything, short, take profits on shorts, and keep resuming that directional trading. It's a really nice opportunity there, about 3 or 4 solid opportunities to get bearish exposure. And again, now we're seeing the market really succumb to a lot of this pressure here. Lastly here, let's end on Qualcomm, another really big tech name here. Blue line crossing below the black line, Neural Index bearish, and a very similar forecast. And with some of these forecasts, hopefully what should jump out at you is the level of correlation in the markets, right? You can get some valuable price clues if you want to trade Qualcomm on, hey, how are those Qs trading, right? Are we seeing weakness in the NASDAQ futures? Are we seeing a weakness in XLK and some of the technology stocks? And sure enough, these things weighing on these forecasts, giving that good guidance from the short-term indicators like the predicted high and low. But very clearly here, look, the market's in a downtrend and offering up some levels to short and get some of that exposure. So nice opportunities to the bearish side. Again, everything just skewing more and more bearish here, more and more as time goes on. So you see about 11% decline here in the past 5 trading days. So we'll go ahead and leave it there for today. Once again, this has been our Hot Stocks Outlook for April 4th, 2025. Thank you all for watching. Best of luck out there, and bye for now.